You're paid 32% on this credit card, but at 2% on your mortgage. But you're married to that rate, and you can't look at this one objectively.
And that's why your credit card balance is never going down.
No.
Because it's just you're paying interest only at this point. Consumer credit card debt is at an all-time high.
Oh, it's insane.
It's the worst it's ever been.
But people are really married to that interest rate.
They're married to that rate.
And that's the thing, is like,
and so they don't even check. They don't even look what their options are. Well, Matt, the mortgage guy, welcome to Happy Hour with HatchMan. We got to do our cheers with our Mexican Cokes here. So, all right, today we're going to be talking more about just mortgages. We're both mortgage guys, but I want to get into all this stuff as far as what's possible for homeowners. First of all, Matt, tell us a little bit about yourself and let's get into it, brother.
Thanks, Braden. So yeah, Mortgage Matt, right? I do mortgages. It's pretty awesome. I love it though. It's a lot of fun. I got into it after I bought my first house. We kind of talked about that before. I had a bad experience with my loan officer. Decided that it would be better for me to like do what they were doing, just be nice to people, answer their questions. Fell in love with it, being able to help people get into their homes. You and I both worked at, regular banks first to learn how to do this. And then we got into the broker space, literally by getting beat out by a broker. Like their rates were so much better than mine. I was like, I couldn't compete.
Right.
I called the guy, I was like, how'd you do this?
Right.
And he was like, I show you the way. Like, all right. It felt like a Star Wars moment. It was like, okay, we're going to fly out, find a guy named Yoda, and he's going to teach me everything.
And how long have you been doing mortgage for? Like, how long ago did you start?
It's been 14 years in the industry. The last 2018 is when I became a broker.
Nice. Okay. All right. So yeah, you get a lot more experience on the broker side. We're in the industry, right? Like I've been doing it 11, almost 12 years now. And same thing, when I first got into it, I couldn't have told you the difference between a banker, a retail lender, a broker. And so I think the majority of the public just has no idea what the difference is. So what's your best explanation of the differences for the everyday person?
Well, I want to say, and these things change, right? They change. That's the one thing. Like it doesn't matter which bank you're with or which place you're at or where you're going to, like these things ebb and flow. So I think the biggest difference is that with a specific location, like if you're working at with one location or if you're going to somebody who's at just one location, they just have one set of products. And of course, this is what I believe. That's why I am where I am. But their guidelines and their rules change without their input. Yep. Like the mortgage loan officer who helps you buy a home at a bank, we're not going to name any specific names.
Right, we're not name dropping here.
But any regular bank that doesn't have the ability to do what we do, it's like you got one set of guidelines, you have one set of products, you have one set of rules. If it doesn't fit inside the box, they can't tell you where to go find that house.
It's approved or denied, and that's it.
And so to me, that's the biggest difference. Because like what you do, what I do, 300 plus lenders,
right?
Able to choose from any kind of loan product out there. You got everything from stated income loans to bank statement loans to things that people haven't even heard of, Heckham's DSCR, right? The list goes on. It's almost so much information that it's too much information. And that's literally why we have a job.
Yes.
Because it's like, take all this and
we're the funnel.
Right here. Like you have these 2-3 options. Like that's all you get.
Right. Yeah. Because you can't give all those options to the client. Like,
oh no, but you can. It's just, that's.
And that's why I say it's not a one size fits all, right? Like every individual situation is unique. And our job is to take that unique situation and find the best product I don't even say it's finding them the best product. It's letting them know what their options are and ultimately letting them decide.
Well, that's we have to let the consumer choose, right? And that's the one thing that gets me all the time too about brokers that like come over for broker. We talked about that. Like if you're just using one place and you don't have actual options that you're giving your clients, like you're not a broker.
Right.
Like you're just doing loans for that. Like you're
just trying to fit them into another box.
And there's already companies out there, they offer you a lot more support, right? They have a lot more things. Now granted, if you want to, have the flexibility and be able to help people the way that we help them, right? There's still, I believe, more flexibility like that, but there's other shops out there that are boutique lending shops that have a little bit more flexibility, but
of course,
they still let you just do all your loans with one bank. And like that's probably the best choice if you just want to do one, right? Yeah. But if you want to actually be able to help anybody, right, and truly be able to help them, absolutely. I don't think there's any other way to go besides broker.
Dude, I agree, right? Like again, I've gone through all of the models, the banker model, and again, like I loved starting at the bank. I loved what it taught me. It really helped me learn about the process or learn the skill sets and kind of going through those trainings and everything. But yeah, in order to grow and in order to ultimately help more people, the broker, I think, is the best option for that. Because like you said, if someone comes to me and, we can't find a solution, like I can't remember the last time we couldn't find a solution for somebody. Like, and if we truly can't, like I can at least tell them what they need to do to find like the right fit for the next one.
Well, I mean, there are people I could say I haven't been able to find solutions for, but usually it's because like, they really shouldn't be buying a house.
Correct. Right. It's not the right time. And I have no problem telling people that.
But then it's like, hey, let's work on credit, right? Something I could never do at the bank.
Yeah.
I could never tell you how to fix your credit.
You can give them a roadmap on what they need to do in the timeline that it'll take to get them there. So that's the real difference. So
yeah. No, we should probably cover the fact that we don't work at the same company.
I agree, man. Yeah, we are technically competitors. We are.
I would even say rivals.
Rivals, right? Absolutely different brokerages.
Yeah, I mean, I know. There's not always been good conversations around the two having with each other. This fair. We could start a new trend.
Ooh, let's do it, man. Yeah. Brokers getting along.
Yeah. Well, there's definitely enough business out there for everybody, and with the way things are kind of changing and going through, it's like, I don't think having division in our industry is any help to any of us.
No, it's the opposite.
Yeah.
Because I like what you said earlier, right? It's that abundance mindset.
Yeah.
Like, because you're going to have your clients, you have people that are going to work with you because they like working with you. Same with me, right? And they're usually not an overlap. Most people don't like me anyway, so they're the ones that choose to work with me.
Yeah, I'm sure the one, but that's one of the things that happens too. Is like you meet those people and you're like, yep, this person, and it's so much easier to work for them when it's when it's
absolutely,
easy. Yeah. And they know who you are because you can be who you are. I'm not Matt who works for like Bank of America, Wells Fargo, Chase, whichever bank it is, right? I don't have to put on that face. That was the other thing too, the call center scripting.
Oh man, right? Oh. You can only say certain things. Like,
you have to repeat my NMLS ID is 1357306. It's called me monitored or recorded, right? Every single time. Yeah. You hear somebody else on the phone, you had to say it again.
Now you can just talk to them like a human and find the solution.
It actually was hard the first year to be human again.
No, it is. You have to unlearn all the stuff, right? Yeah. Like I remember that going through that phase of leaving, the bank and getting into, even retail and then broker, like just having to unlearn all of the stuff that was so ingrained in our mind because of how well the training is. But like, it's like, no, you're allowed to do that. You can do this. This is not against the rules. It was just against the rules for the place that you worked, not as a whole. And I know one of the other things we talked about, because, the whole reason I like to do these, we're different mortgage companies where we offer different things, but similar things. It's all about helping the clients find the solutions, right? And letting them know what's possible. And a lot of what I do is that home buyer education. And unfortunately, there is a lot of negativity still around housing right now. I get into online fights all the time, right? Like, housing is unaffordable. People throw out the median sales price and the median income, and it's unaffordable to buy a house right now. It's not possible. And so what I think...
What?
Like
people actually argue with that online?
All the time.
Like right now, today?
Today.
In like you're talking about our local market here in Arizona.
Absolutely. That people are saying it is absolutely unaffordable.
Where are they trying to buy houses at?
That's what I'm saying. Like so that's why I always say I don't think we have an affordability problem. I think we have a mindset problem.
I agree completely.
Because it is affordable if you know what to do. Like, is your very first house when you're 20s, like, did you buy a multi-million-dollar house, your very first house?
No.
That had 7 bedrooms and 5 bathrooms?
No, I did not know.
Okay, neither did I.
I actually bought a 2-bedroom, 1.5 bathroom townhouse in Mesa off Alma School in Southern, right next to MCC. That was my very first house. And I bought that one for $40,000 in 2011.
Ooh, oh man, yeah, that doesn't exist anymore. So that's the argument, right?
But you know what?
You can't do that.
The second house that I bought though, right? The second house that I bought, the one we talked about, 3 bedrooms, 2 baths in Gilbert, right? Right by Freestone Park, $214,000. That was in 2014 as well.
Sure.
Right?
Well, those prices don't exist
and that doesn't exist anymore either, right? Well, the other house that I bought in Gilbert was $500,000, right? $505,000. It's 4,000 square feet, 5 bedrooms, 3 bathrooms, beautiful yard, great neighborhood, right?
Yeah.
It's right off Williamsfield and Gilbert Road. That house is, that price also does not exist anymore because that was in 2019.
Right.
The funny thing is, like, I bought all these houses at really good times.
Right.
I didn't really do anything special. I just bought a house because I could afford it.
Right.
It wasn't like, I didn't run this calculation and be like, where's it going to be at in the future? Like the first house I bought, I wasn't in mortgages, right? Second house I bought was the reason I got into mortgages. Like the third one was just like, I need to be in a bigger home for my wife and my kids.
Right.
And,
yeah, you grow and family.
Right.
Happens.
Like we kind of outgrew our space, but like we did that house hacking mentality. I still have all these houses too.
Oh,
and I
okay.
rent them all.
That's awesome.
It's the coolest thing. Like the fact that when everybody pays rent, my mortgage gets covered.
Right.
So,
and that's what it is, right? It's not about timing the market. It's not about waiting for the right thing. It's about your specific timing, right? Like you said, you bought the house when you could afford it. But so many people don't even try anymore. They look at average sales price and average home price, and so they don't even look at their options. So what do you say to those people?
a couple of things, right? We've heard that saying, time in the market, which is really important. But if you're not looking at your options, there's a saying that kind of has always stuck with me, and that's, you don't know what you don't know until you do, right? And it's really true in lending and like what we do. Kind of like the same idea of like where we worked at in the banks and how we didn't know what it was like to be a broker until we finally got there.
Right.
Because the banks literally wouldn't have kept any employees if the employees knew how good it was to be a broker.
I know,
like,
right?
There'd be no competition. Side note, it's not kind of for everybody. Like you have to be a special kind of person to do what we do.
For sure, you do.
It's not easy by any means. It's a lot of work. But like going to clients is the same thing. It's like you can rent, but I don't know about you. I mean, have you planned your retirement? Have you gone through that with a financial advisor? Like,
personally, yes.
Yeah.
I've done
when you put money in your first 401k, do you remember doing that when you're at the banks? And you're like,
Yep.
you have to set that target for how much you're going to have.
Yep, in
and how much
retirement.
did you ever plan on paying rent in retirement?
No.
Neither did I.
No.
I don't know what the argument would be about not understanding like what your affordability looks like and where you're at. I do understand people having heard horror stories about getting into their first home
Sure.
in a new build that was 2 hours away from where they wanted to be.
Right.
Because we ever done the math on that, driving 2 hours a day for 5 days a week,
Yeah.
at 50 weeks a year, taking the 2 weeks for vacation turns into 2 months in the car.
Whoa.
Like,
Okay, that's intense.
2 months of hours, like that's 2 months away from your kids,
Right.
2 months away from your spouse.
Whoa. A
Right.
2-hour commute that takes away 2 months over the course of a year.
Yeah, of waking hours, right?
That's crazy.
Think about like
Those
that.
are important hours though. So
Yeah, those are hours away from everybody else, right?
Something to consider,
1 hour,
right?
just 1 hour from work.
it's a month.
It's a month.
Like
Like,
crazy when you think about it like
and
that.
when you get kids, you
Yeah.
only have 18 summers,
Right.
right?
That's all you get.
And then, well, hopefully,
Right.
I don't know. Some people are just like, I'm gonna stay. And realistically, like, dude, I don't know about you, but like my kids,
So I tell my son has the advantage because he's older, but I told my daughter, I was like, once you graduate high school, you get 1 year after that, and then I'm out, which means you got to be out.
yeah. Back to that thing, man. It's just like, it's crazy seeing people like go drive out in the middle of nowhere. And like, I've even had clients come back to me and say, hey, I got rid of this house by one of these companies. There's companies out there that will buy those homes from you, make the
absolutely.
payment, try to rent it out, right? Still stays on your credit. By the way, we can approve those too.
Oh yeah.
Yeah.
Absolutely.
So even if that mortgage is showing up and somebody else is paying it, as long as it's documented properly, like you can remove the debt.
Absolutely.
It's pretty crazy.
Yep.
So don't ever think you can't buy a house without talking to either one of us.
Say at least check your options,
Yeah.
right? Like,
And that's the argument, is like, don't assume anything.
no, absolutely.
Like,
So the big one, I like to just, the people that argue with me, here's some of their rationale behind it. So I had quite a few people on a certain post about affordability say that it's cheaper to rent because it's a lot less than the mortgage payment would be, which I already know where you're going to go there because I'm in the same spot. It's like less compared to what? Like you can get a comparable mortgage to what your rent is. It just may not be the house that you want.
but it's also like, how much of your rent are you saving?
So they're saying the savings, you put that into like the stock market or the S&P.
No.
Like,
no. When you're actually renting,
Yeah.
right? How much of that money is truly getting put into an account for you from the rent? It's not. It goes to the landlord.
Exactly.
That's why I have rentals.
Yeah. So they're saying like, instead of putting all your money towards a mortgage, just pay a cheaper rent, and then the difference that you would be paying in a mortgage, invest in the stock market, and you'll make more money in the long term than buying a house. That's one of the arguments.
That's a good argument. I like that argument.
And that's what I said. I said, but who has the discipline to do that? First of all, most people don't set money aside.
That's a good point. But like, there are going to be those outliers that can.
Right, absolutely.
And the stock market can historically return slightly better.
Right. But could you also do that as a homeowner? No, that was my argument.
I mean, you could buy like that. I was thinking that too. As you're going through, I'm like, you could buy a slightly less house, but I would even challenge it further than that, of like, there are quite literally stocks called REITs.
Okay.
Right? Real estate investment trust.
That's right. Yeah.
Right?
That's right. Yeah.
And that's part of the stock market. Those pays dividends and returns.
REIT.
And they do that on a regular basis. There's a bunch of them that I have money into as well.
Investment trusts.
Because I can get 20% return on some of those, 18% return, but it's a dividend paying stock.
Right.
So that doesn't mean that I'm making 20%. The stock's actually getting devalued at the same time every time it pays a dividend, right? Yeah. Which a lot of people miss that. If I own the real estate and I'm living in it, I'm no longer paying that rent to somebody else.
Right.
I'm now investing in my own personalized asset, right?
Absolutely.
And over time, it will become paid off eventually.
It appreciates.
Yeah. Or if you house hack it, right? Which I keep seeing this all the time. Let's say you buy that house, you live in it for 2 to 3 years, you put a little bit of sweat equity into it, right? And then you buy the smaller house first, you move into the next one.
Yes.
And you go to the next one.
It's all about that first house. That's what I tell everybody. So there's a lot of different...
So like you're investing in yourself though.
Absolutely, yeah. Well, there's a lot of different definitions around house hacking, right? Like people are always asking about that, how to get into it. Yeah. So what is house hacking to you?
Okay, so exactly what I did was I bought my first house, right?
Okay.
Lived in it, put sweat equity into it. We had blue carpet, red walls.
So it was a fixer-upper. It was dated.
It was gross. Okay. And this is during the short sale days too.
Sure, yeah.
So we picked that one up for 2011, 40 grand. I probably put 15 into it, right? New kitchen, and when I say new kitchen, like I painted the cabinets, right? It was a $40,000 house next to Mesa Community College. This is not the best part of town in 2011. Sure. It's getting better now.
Yeah.
If you remember Fiesta Mall.
Oh yeah.
Yeah, it was right next to Fiesta Mall. There's no more Fiesta Mall. They ripped it down.
It does not exist anymore.
No, it does not. But it was a good house, right?
Yeah.
And I tell the story. My wife cried when she saw it because she was like, "This is gross.
This is our
I'm never going to live there." We weren't married at the time. She's my girlfriend.
Yeah.
A couple months later, she cried when she saw it again because she's like, "This is cool, right?"
That's awesome.
I put a laundry chute in, put a chandelier in the bathroom,
nice.
Redid all the flooring, painted all the walls. So it looked decent, right? It was a cute little place. Still have it. Rents out great. I was paying $500 a month in rent then. Figured out that if I just saved that money, I could buy my next house later. So that's kind of how I house hacked, right?
Gotcha.
I took what I was paying in rent, put it towards the mortgage, right? Went through that. Now, not everybody can pay cash. It's not always happening. But as long as you run the math and sit down and do it, or do it with somebody like you and me, where you create a plan, it's like, this is my time frame. There's that first house, and then 5 years later, it was buy the next house.
Yeah.
So that's what I did.
Would you have been able to buy the second house had you not bought that first house?
Absolutely not. No chance. And the second house that I bought, right, we got that one, again, $214,000 in 2014. It's so nice that it matches on those two. And lived in that house, loved it, right? Was great. Rented out the first one. Bought another house in Tempe. Rented that one out. Making money off that one. Bought another one in Mesa. Renting that one out. Making money on that. So like, we're buying all these houses the whole time.
And now you have income.
And now I have actual income. Like when I look at it, truly look at it, it's not just like I have 1 or 2 rental properties. Like I have 5 properties I'm renting.
Right.
Even if I don't put money in retirement right now,
you have those. I'm
going to be able to do it. But the way I did it was I bought the house to live in it as a primary. I renovated it. I made it nicer. So kind of like the Burr method.
Yes.
Right?
Yeah.
And then I moved into the next one. And to me, that's house hacking. There's other definitions about it where it's like you live in it, you've heard about co-living?
No.
You split up the house into multiple homes.
Oh,
There's a company called Pad Split that specializes in that. There's a few lenders that we have that we can actually do loans for that. So if you buy the house and you want to add like 10 bedrooms to it, you close off all the regular living spaces, no more offices, no more garages, right? Just multiple.
So it's like a group home situation.
It becomes a full income earning opportunity, right?
Okay.
There's companies out there that specialize in that.
Right. No, like I know sober living homes do something like that because
right, but it's hard to do the loans. Right. So these are still classified as residential; they're not commercial. And there are ways around it. There's that definition of it. To me, it's buying the house and getting it bigger. And there's the things that make a primary residence, right? So it's buying as a primary and then converting it to an investment is my definition of house hacking, to answer your question. And the things are really simply, it has to be larger in square footage by at least 10%.
Okay.
Right? That's one of our primary residence requirements.
Okay.
Adding a bedroom or bathroom also counts as that 10%. Because if it goes from a 3 to a 4, you're good. Getting closer to work by substantially amount, which I would call 50% or more.
Okay.
So if you drive 20 minutes to work and you move 10 minutes away, that's closer to work.
A benefit.
That counts because now you're not spending a month in the car.
Exactly.
Right? Or if you go from 2 hours to an hour, right, you're saving yourself a month in the car. The other one is reducing the size because you're getting older, kids are moving out, like we talked about, like 18, get out, we're done.
We're done.
Right? So that's the other one. So if you could take those 3 ideas of what creates a primary residence, and then you can actually create that plan with someone like you or me where it's like, okay, cool, first house we buy small.
So like every 3 to 5 years?
3 to 5 years, live in the house for a while, right, get it.
Okay.
But buy that first house, get it small. Second house, maybe get a little bit bigger because you're ready for the bigger house. But when you buy that second house a little bit bigger, don't get it right next to your office. Maybe go 15, 20 minutes away from the office.
Okay.
Because eventually I'm going to buy another house.
Right.
You want to be in a good neighborhood, right? but now I'm going to buy it closer to the house the next time. And when I buy the one closer to the office, it's going to be a little bit smaller.
Okay.
Right? Because, or the same size. I can buy a 3.2 and then buy another 3.2. It's staying there for 2 to 3 years, right?
Yeah.
Live in it, put some sweat equity into it, paint it, make the floors nicer, redo the things that need to be redone, take care of the house, right?
Yeah.
Meanwhile, you got the other 2 rentals going. And they're like, hey, I want to buy another bigger house, a little bit further away from work. Oh, hey, I want to buy another house. We're going to buy one closer to work. And you could just pop back and forth that way, right? But you can't do it like every year or every 6 months. Like it needs to be...
Has to make sense.
It has to be real, right?
Yeah, it has to be
real. But strategizing how you purchase real estate isn't deceiving anybody. It's not mortgage fraud. You're not hurting. You're not hurting the banks. You're living in that house. You're occupying it as a primary residence. You're doing what you got to do. Yeah. You're following the guidelines perfectly, and using the guidelines to your advantage. There's no crime in that.
Basically, playing part retirement specialist, right?
Exactly.
Like planning for the long term, and I think that's what it comes down to, right? Is like you just have to think a few extra years ahead of the game. Mm-hmm. Like if you can just think a little bit further into the future. And know that it's a short-term play for a long-term benefit. Like that's really where real estate wins 100% of the time. I don't know about you, but I've gone down the rabbit hole of studying like the last 90 years of real estate trends. And given enough time, they always increase. Yeah.
Well, and it's decreased recently. I mean, nobody talks about it. Mm-hmm. Like I haven't heard or really seen anything that's like really confidently saying like real estate in Arizona has gone down by 30%.
No, it's been rough.
But like you saw the value of your house go through the roof. I saw the value of mine go through the roof, and now it's like, we're not there anymore.
Now we're not there anymore. So what does that mean for buyers? Are homes on sale right now?
I don't know if homes are always on sale, right? But in reality, it's like we talked about, like if it makes sense, it makes sense.
Right.
If it doesn't make sense, it doesn't, right? First time home buyer probably shouldn't buy a house like this.
Of course,
right?
Yeah.
I mean, now some people, but for the most part, it's like, work your way into those things. You don't have to house hack. You don't have to rent.
Because not everybody wants to be a landlord. Do you run that yourself? Do you have a service that does it for you?
Oh, I do it all myself.
You just do it all yourself.
Yeah.
Okay.
There's some pretty good platforms and systems out there. I'm not going to plug any of them for you, but
for sure,
I find it a lot easier to manage it myself than it is to pay somebody because management companies are built to make money.
No, they are. Yeah, everyone's got to get that.
Everybody gets paid, but at the same time, like when I first started doing it, because I was house hacking, because I was not in the financial position I'm in today, I could not afford to have somebody else manage my properties.
Gotcha.
Like
any horror stories with that, like collecting rent?
Well, with management companies, absolutely.
Yeah, but what about just doing it on your own though?
No, I mean we've had to evict people, right? But like these are people. They're just trying to rent your house.
Yeah.
Right. I've had people try to commit fraud against me, hand me fake checks, do stuff like that.
Whoa.
Which is crazy because I'm in finance and like she used whiteout on the check.
Oh, come on.
I should have caught it, but things happen, right?
Sure. Yeah.
Like we're human, we're not perfect. People are going to make imperfect mistakes. People are going to do things that, they're trying to get a leg up on you for whatever reason. But I live very firmly by the, like, if you do the right thing, good things are going to come.
No, I agree with that too. Do good and it'll come back to you.
Right.
So, absolutely.
What do you think about refinancing at 1% minimum?
What do you mean?
Like when clients say that they have to save at least 1%.
Oh, like 1%? Not always. No, I share this all the time. Like I've even people that have the 2-3% mortgages. In some cases, it makes sense to refinance those into 6-7% if we're paying off a bunch of debt, if we're opening up their cash flow, if we're putting them in a better financial situation, because of how the mortgage math works, right? Like I ran a debt consolidation for a client. So it was a VA loan. They had, it was pretty rough. I want to say like 120,000 plus in unsecured debt. And so they, between the mortgage payment and between all their other debts, they were paying like $6,000 a month. Like it was really expensive. And so we did a refinance, and this was back, I think this was over a year ago. So that was when rates were like 7. And we looked at the numbers, but what we did is like, all right, but you're paying this now. It's hard, but you can do it. You can afford to do it. It's just, there's no end in sight.
Comfortable,
yeah. So we got his mortgage down to $3,000, paying everything off. And so that opens up $3,000. And so it's like, even if you wanted to take even $2,000 of that extra money that you're saving and put it towards the principal balance of your mortgage every single month, now instead of all your debt being paid off, in roughly 30 years, whatever, it was going to be paid off in like, it cut off like 12 years off the life of the loan.
Why not a HELOC though?
Yeah, we did. We looked at that option too, but this one made more sense with the cash out refinance because it gave him a fixed payment. That's just the math of it. Like we showed that it, not only did we pay off all of his debt, we saved him 12 years over the life of his existing mortgage by going from a 3% rate to a 7% rate. like that's just mad. Like the overall savings was hundreds and thousands of dollars in interest. So rate is not always everything, right? It's the scenario. And
I agree. It was almost like it's kind of unfair that we're both having these conversations because like we know these answers. So it's like I can just lead you to water, and you're like, yep, this is how you this is it.
Right. But so and how many people are like that right now? Consumer credit card debt is at an all-time high.
Oh, it's insane.
It's the worst it's ever been, literally, in the history of the United States. Like,
but people are really married to that interest rate.
They're married to that rate.
And that's the thing is like,
they don't even check. They don't even look what their options are.
It's the same thing that would happen like for the person's like, I can't afford to buy this, I have to rent. It's like you're paying out 30% in credit card or 36. Credit cards went up to like, I think I saw one at 32%.
Yeah, they're not.
I was like, you're paid 32% on this credit card, but a 2% on your mortgage. But you're married to that rate and you can't look at this one objectively.
And that's why your credit card balance is never going down.
No.
Because it's just you're paying interest only at this point.
And these credit card companies are lending money to, it's insane.
It's crazy who can get access to it. Like
speaking of credit cards, Built, freaking awesome.
Yeah.
Love it. I'm going to UWM plug that one all day long. Love that credit card. I use it on all my rentals. I'm getting points. It's the best, right? I have all my rentals in it too.
Yeah.
So if you're a landlord, like I'll send you a link. I'll give you a link if you want to put it up there. Do you have one yet?
No, I just sold my one and only one again. I'm kind of starting over on many cases because of my divorce. So I was working towards, building my portfolio up.
It's a cool one because you can pay your mortgage through it, right?
Yeah.
It pays it off the very month afterwards, which is pretty cool. Or the day afterwards, not the month afterwards. So no interest is accrued.
Yeah.
And then you can put your HOAs on there.
Really?
I've got all kinds. And then I'm just getting points.
Dude, yeah.
So
that's the whole point of credit cards. That's
right. But it's like I'm paying my mortgage anyway. It's my largest expense. I might as well get points for paying the mortgage.
And it'll let you pay.
Anytime you refinance somebody right now on UWM, which I just did one too, they send the client a link.
Okay.
So it's like, hey, here's this thing. It's going to happen. So I preemptively get ahead of it, right?
Smart.
Because we have an affiliate thing.
Paying a mortgage every month anyway. You might as well get a little bonus. The abundance of tools that we have access to and what's out there. Like I feel like just the majority of people just aren't. They're not aware that it exists. There's just the education. So that's why I do these things, man. Like that's why it's always good to have as many people on here, whether we work for different companies, whether we're competitors. Whatever it is, like it's just.
I hope you steal a loan from me. I truly do. Like I hope you and I go up against each other, and you're like, my rate's better than Matt's,
right?
Because I'm charging less than he is, and
that'd be great. Right?
Yeah, that'd be my best day. I'd be like, I know that guy,
right?
And actually, I'm sure you've had it happen already. Absolutely. I've had it happen where like someone else we're competing for the same deal, and they're like. They see the loan estimate and they're like, who is, oh no, he's a good loan officer. Go to him.
Stick with them.
Yeah. Because it's like, I want to help people get into a home more than I want to make a paycheck most of the time. But if I know you're in good hands, it's like, dude, take it. Now, if I see, big bank name.
Oh yeah, no, it's a different story.
You're not beating me. No,
absolutely. I'd love to see a loan estimate with your name come over and be like, oh yeah, I'm not even gonna look. Just go with Matt. He's a good dude.
It is a funny thing when it happens.
No, it does. Yeah, because it's a small world, especially and it's getting smaller because of. Just how more difficult it's gotten. I know this market in particular has been wild, right? Like you said, you've been doing this 14 years. I've been doing this almost 12. Like
no, it's not 2022 anymore, man.
No, it is. It is a difficult market.
Loans aren't falling off the trees and just showing up.
Refinances are much lower. It takes a very special type of person to refinance. But I do think more people do need to look at their debt consolidation options if they're homeowners, because I feel like there's so many people that could be saved.
Also, the higher rates.
Yes.
The 2 trillion, 3 trillion loans that we've written since the rates have been higher, right? A lot of people are stuck in this, like, I got to save 1%.
I know.
That was an idea that was floated back in the 80s. Right?
Yeah.
And that's when rates were, 7, 8, 9, 12, 13, 18%, right? And it was you refinance when you can save at least 1%.
Right.
But if we look at housing prices back in the 80s, and I'm just spitballing here, but like $30,000, $40,000, $50,000 for these same houses that we have right now.
Yeah.
So by saving that 1%, you cover your closing costs and go through that. But let's face it, man, title fees are probably only half of what they are now.
Oh, absolutely.
Right?
Yeah.
And I'd say lender fees, appraisal fees are probably about half of what they were now too. Yeah. So like $200,
We've gotten more efficient.
Like housing prices are like 7 to 10 times what they were back then. Fees aren't 7 to 10 times more.
No.
So the disparity between the two, people were trying to save 1% back then. Today, I say you can get it done with 0.75 most of the time.
There's a lot of old school like mindset stuff out there that just people seem to stick with, right? Like, I need to save that 1%. I need 20% before I can buy. Like, there's just a lot of stuff, and it's And even just house debt in itself, right? Like recently, my grandmother passed away. You know, it was her time, and we all knew it was coming. My grandpa, in the will, he's got 4 kids. One of his stipulations was, you know, any money that was left over needed to go towards the kids' mortgages. He's like, you need to pay your house off. Like, that was one of the things he put in there. And I was just like, man, that is such a like
old school.
1970, like, you know. And so, you know,
Please don't pay off my 2.25% interest rate. Like, don't touch it.
the siblings were all throwing a fit about it because they're like, wait a minute, like, you know. So, you know, luckily my dad's the executor, and he's like, I'm not going to make anybody do that. You know, it was not in writing. That was just his wish that they would do that. But it shows you how much times have changed, right? It's not always about being debt free. That doesn't always mean that you're winning. So it's about, to me, it's about that cash flow, right? That cash flow is what does it. And the really smart people, like if you look at even the way the U.S. government runs their own business and most other corporations, they use other people's money or debt
OPM,
to service their lifestyles.
I mean, I'm doing the same thing.
Absolutely, right?
Being in real estate, you have mortgages. Like, we're using OPM all day.
Mortgages. Absolutely.
That's another thing, though, and you hit on it for a second there when you're talking about paying off those mortgages and like the way things used to be. But like right now, when clients are staring at like a 7% interest rate, right?
Yeah, it scares them.
Or just under 7 or over 7 or whatever rate they're looking at, like the amount of money you're paying in interest is substantial.
Oh, it's a lot,
right?
Absolutely, especially over 30 years.
You said cash flow, like I want to hone in on that just for a second, because it's not just about like, for people who are looking to do this, if you just go buy a house and you're like, I'm going to max that out, like you were talking about 45% and over, like we can go to 50% on DTI, someone's 55, like, oh yeah, we can do it.
Yeah, you can go to like 62, man.
But like, if you can't afford that payment, you're just going to make the payment barely. You're going to have your girlfriend or your boyfriend or whoever else to help you, maybe mom, dad, whoever else to make just the payment. Like, you're not really getting ahead.
No, that's not helping you.
And it's the same thing we were talking about, like when you go through the stock guy, he's like, I'm going to invest that money in stock. Like, I always tell people, like, buy a little bit less money you can afford.
Yes.
Put just a little bit extra towards the mortgage, right? Because even rounding to the nearest 100 is tens of thousands of dollars in difference. Yeah. You know, you round to the nearest $300 or $400 or $500 up, and you're like, hey, I know that sounds like a lot of money, but you know, it's the same thing as like putting money in your 401k. Mm-hmm. You set it, you forget it, you set that automatic payment, you walk away from it, and it just automatically does it. And then before you know it, like you're blowing through that amortization schedule.
Oh yeah, I had a first-time home buyer, like after like, I think it was their first year in the house, right? They gave me a call and they're like, dude, all of my money is going towards interest. What kind of loan did you put me in? And I was just like, I did a bad job of explaining that up front, right? Like, more amortization. It's a different ballgame. It's not like an auto loan, right, where it's split over the 5 or 6 years you have the loan, and this much goes to principal, this much goes to interest. Like,
auto loans are only like 6, 7. Now they have 10 years because these freaking trucks are $150,000.
Don't get me started, man. Yeah, people have no problem getting those. Though.
No, yeah, anybody can get approved. Anybody can get.
You're
approved. You're approved.
It's crazy. Yeah. But yeah, so mortgage is a little different, right? Like, it's like you really won't start. You're not going to be putting more money in towards your actual principal until halfway through the loan, till over that halfway mark. So like you said,
and that's at like old rates at like 5%, 4.8, right? Now that we're in the 7s,
now it's even
you gotta go even a little bit further. It's like 16, 17, 18 years before you hit that like 50-50 mark.
And so that's why you mentioned, like the more you can put towards the principal up front in the first few years of your mortgage will save tens of thousands of dollars and years off the life of the loan.
Same thing with that debt consolidation you went through. It's like just that little bit extra, right? But I was thinking about that when we're going through it. It's like these first-time home buyers that are, they're literally like, I think we're all damaged from COVID still.
Oh, absolutely.
I think that's really truly what it is. Like there's this issue that we all have with how much space we need to be at home because so many people work from home for this short period of time. And now everybody's finally going back to the offices doing that. Some of us are still going from home, but this idea that like I have to have space to spread out and do these things, it's like, dude, you live in a 2-bedroom apartment right now. Like, why don't you just buy another 2-bedroom townhouse right now? Instead of trying to get that 4 or 5-bedroom home that you're going to lose 2 months by living in.
I feel like the expectations of people have just gotten too high almost. Like what you did, right? You bought a fixer up, or you had to put some work into it. It was
that's all I could afford,
right? But that was a smart way to do it.
Yeah.
I don't. Maybe it's just less people are willing to do that right now. I don't know what the issue is, but this is why I say we don't have an affordability issue.
It's a mindset problem
because those types of homes are still available on the market, right?
Dude, I can cash flow on a rental property in Tempe right now.
Exactly.
I can go buy it today, put 15% down, by the way, 15% down on rental properties, big plug there. A lot of people don't know it. It's available. Let's do it.
Absolutely is.
Right? Rates are better at 25%, but for all of our investor friends out there that want to do 15, like we can make it happen.
But if it cash flows,
I ran the numbers. I can cash flow.
Right.
I cash flow $100 a month on some of these properties in Tempe right now.
And that's
right. Mesa, right now. Chandler, right now.
If it cash flows, who cares what the interest rate is?
Right.
It's the payment compared to how much you get.
And that's the thing. These investors are having a heyday. Like I'm actively looking for more homes today, not because it's a bad time to buy, not because like the market's going to turn, not because, it's because I know I can actually make money. Now, when I can't make money, there's a problem.
Of course.
Right?
That's a
when the
different
rental, when the cost of renting the house is so much cheaper than owning the home.
Yes.
It's like there's this big issue. But when I can go buy that house and I can make more money off you renting it than you can.
Yeah.
Why are you not owning it?
Right.
Right? And I think, again, it's this mindset issue, right?
The mindset stuff. Because like you said, the real estate, the money in real estate is not from owning and paying a mortgage on a primary home. That's not where it comes from. That's step one.
That's your longevity. That's your retirement plan.
Yes.
That's your 401k plan. I need to make this much money.
And so that's
I gotta
the
put
other
this much
argument
away.
I
I'm
had,
not
like,
going to pay rent.
It's like you can't be too singular on that. Like that's just step one.
Yeah.
That's the long-term play. But yeah, it's rental properties and things like that. I heard a guy speak one time. He said, if you can borrow money that makes you money, you want as much of that debt as they will give you. Like that's it. Like
and that's a big difference between what we do now too. Sorry.
Yes.
I'm like ADD on this one.
Hey, we're all ADD, man.
But do you remember when we worked at the big banks, you only do 4 mortgages?
That was it, yeah.
You only
4
have
per
4.
person.
That was it. I have 6 right now.
See? That's not a rule. That was their rule.
It's just made up. Now, granted, we can only do about 20. Like that's the actual rule.
I think you can. No, there's investors out there that'll let.
There's investors that don't have a cap, right? Yeah. And then we can start doing blanket loans, and we start doing some of those other type products that are out there that allow you to consolidate that, because the management of having multiple properties that way
that is a lot. Yeah,
that's even the mortgage servicing. Like every month you're switching servicing for somebody where you have to go set up new auto drafts and payments.
No, it's a headache.
Yeah, but yeah, dude, it's just like watching people, like you said, like if you can get more of that debt, get as much as we can, and absolutely,
That's it, yeah.
And people they're not making money. They're just not paying that money to somebody else anymore.
Yes,
right. It's that old saying of like, invest in yourself, you'll probably be fine.
Absolutely.
Right. Because then you're the one who's doing it. You're the one who's in control of it. Like it's not somebody else. Right.
Yeah, because I just know what it's done for me personally. It's like, you're paying down a balance into an asset that's going to be worth more the longer you keep it. Like it's just there's so many benefits to it. So it's so hard because some people just have their minds set on it's unaffordable. It's unaffordable. You can't do it. Just like buy a cheaper house. Like it's all about getting that first house. Like my first house was all I could afford. It was, and I made the location sacrifice, right? My first house I was also 23 years old when I bought it, and I bought way out in Santan Valley before it was Santan Valley because it was all I could afford.
How far were you driving?
At least an hour. Yeah, I was driving an hour to work. Yeah, it sucked. Yeah, it sucked until I got a motorcycle.
Is that why you don't have any hair?
Oh, that's just
sorry.
No, sorry. I got no shame. I love that having.
I'm in the have hair club. Okay, it's a small group of.
I get to wake up and just go, man.
Dude, so. I'm not gonna lie. I'm not jealous. You pull it off better than I ever could. I have a funny shaped head.
To be fair, I've been shaving this since I was in high school. I've done it like having hair. Partly is because you see my eyebrows. That's the color of my hair. Like it is so clear. It is like see through, man. So. I never saw the point of actually having it.
That's pretty, yeah. I love how you leaned into it too. You're just like, this is what I'm doing.
You gotta own it, man. I love it. I got a nice round head too. So
no, your head, you have like some people don't, like I do not have a head for that.
Little chunks in there and stuff.
Yeah. So. Envision my head in the same shape that it is right now, basically, just without hair on it. And that's basically what you get.
Love it. That's awesome, man.
If you're a young family and you have like kids and you're not at like higher income earning potential and you work from home and you want to drive out to really, really far because nobody else lives out there and you want space and that like absolutely. Just like loans, the homes are just like loans to me. There's the right home for the right person, the right place.
Right. Well, and the work from home thing is so much more available now, right?
Is,
like that really wasn't a thing back when I was, in the workforce. Like there wasn't a lot of those types of jobs. And so especially those types of people, right? I'm like, man, you have no excuse. Like you can buy a house anywhere if you work from home. You just have to make sure you have an internet connection or whatever. But like you have no excuse. Go buy in a remote place or, to be fair, those, depending on the area, that does hurt long-term appreciation of a
It does. Well, it's the same thing. Yeah,
So
like there are
there's
appreciation
calculations.
issues too. But like if you buy in the right place and you get lucky, right? It's just like buying the right stock.
Sure,
I mean, if
yeah.
you would have bought in Queen Creek 10 years ago, genius.
Absolutely,
Right?
yeah.
But now you're like, oh. But also like if you would have bought anywhere 10 years ago, genius.
For sure, right?
That's what everybody kind of keeps
Like
going
look
down
at
that road.
Maricopa, right?
Yeah.
Like they've really that area has really been hurt on values because they've dropped the most. It's
been tough.
It just hasn't that area hasn't grown as much as like Santan. Because I remember me and my buddy, like he bought a house, his very first house out in Maricopa because they were so cheap, and I bought out in Santan Valley because they were so cheap.
Yeah.
And then down the road, like it just the appreciation difference is completely different.
Well, that's why it's so
Santan
important to
blew
work.
up.
So important to work with a realtor today.
Yes.
I cannot do what they do, right?
I can't.
I was just talking to somebody else about it. The fact that like you can get everything online today, like there's AI, there's all these things out there, there's all these ways to like look up these ways to go do things.
Yeah.
But like we don't hire financial advisors to take care of our money. We don't hire realtors to help us buy a house. We hire those people to keep a barrier in between us and our emotions, so that way we make the best decision with our money.
Right.
Same thing with a mortgage broker. Like
Yeah.
you, me, realtors, financial advisors, accountants, CPAs, like they're all there to look out for the client's best interest.
Yes.
They have that fiduciary responsibility.
Yes.
Nobody else gets paid to look out for you.
Yeah, that's
Like
true.
that's the crazy. Like I get paid to make sure I protect those people.
Yeah.
I will make the right choice. I get them into a home. Like that's what I get paid. That's what you get paid to do. We get paid to help people.
and
all
we
day.
only get paid when they get what they want. That's what's
only if they get what they
only
want.
if they get what
Yeah.
they want. It's a true win-win scenario, right?
Yeah.
That's the other reason I love it. I'm just like, look, I don't make a dime. In fact, I'm paying stuff out of pocket
Most of the time.
until you get what you want, and that is something that will help make you money in the long term. So, again,
Sorry,
another reason I love this.
I have those moments where I'm just like I just fly off. On
No,
that.
that's
So
what
it's
this is what this is for. That's what it's all about, man.
Yeah, but like, man, those realtors, dude, if you get a good one who's more worried about her client than she is about like where she's at, or he, right? Because I've got a couple of guys I work with too. Some of the guys are just awesome.
Yeah, there's some really good realtors out there.
And that's the thing is like I could never do what they do.
I'm working towards it. I got my real estate license now. So.
Oh, dude. See, but that's the thing is like I'm just not built like that, right?
Sure.
I got my insurance license.
Oh, there you go.
Like,
I have that too.
Yeah, see, there it is. Yeah. You get it.
I'm just a glutton for punishment. I don't know how to sit still. So.
I'm with you, man. I'm the same way. Yeah, there's a lot of stuff that goes into that, but like you find like a really good realtor, you find a really good loan officer, mortgage broker, you find a really good,
The right real estate agent, the right loan officer makes a
difference,
huge difference. Because like your first experience, right? Like, just you didn't quite have the knowledge and the information. And I remember my first experience too. I was not in the industry back then. I just knew I needed to buy a house because, well, number one, I was homeless. I didn't have a place to live. So I was living out of my truck for a while there. And so that was what got me to buy my first house. And so I had a question for the real world stuff, right?
Yeah.
Because again, we all bought years ago, and so that's the other argument that I hear from people that are like, well, you bought back then, and they're not as cheap.
I'm not going to buy right now, but go ahead, keep going. Yeah.
So, have you had a recent transaction that maybe surprised you that you were able to get it through, or something to that nature, or maybe somebody else would be surprised that you were able to get
Cannabis.
Okay, tell me more about that.
Yeah, so I'm connected with a few individuals in that industry. They're not employees; they are owners.
Okay.
And yeah, man, we can fund on owners of cannabis loans.
That's huge.
That's been a giant one for me. Also,
it's been a huge
brand
stock
new.
for those
a lot of companies won't do it, right?
Yeah, no, they
but
won't
I'll share
touch
with you who those companies are. And anybody in the industry that ever needs that information, if they want to come to me or you and they want that information, like, I'm all for sharing it with you like that way.
Yeah.
It's not that big of a deal. It's just for consumers. Like, I don't find it helpful for consumers to know which bank it is specifically, because when they know that bank, they may not understand the guidelines or understand how to go through it. And then it's like, I don't want them to have a bad experience because they try to act on old information as opposed to current information. So like, if you need help, go to the professionals, right? Yeah.
Stuff changes every day.
It changes constantly. Yeah. It's crazy. But yeah, cannabis owner, that was a very difficult one to get done, but we did get it done.
That's awesome.
And then also new professional athletes.
Ooh, okay.
Yeah. And not doing stated income loans.
Okay.
But we were able to get them qualified based off of their current earnings.
Okay.
And get the banks to accept them on some of those, right?
That's pretty cool.
I also have some hard money sources that I've been able to use over the years as well. But those are like the cool, like, so I used to call, when I used to go meet realtors at open houses and I first started being a broker, I'd go out and be like, hey, my name's Mortgage Matt. They'd be like, oh, cool, what do you do? I'm like, dumpster fire jumbo. Like, if you have a jumbo loan, every time, right? Because I was like, if it's a multi-million-dollar property or $1 million property, somebody's having a hard time, this guy can't figure it out, the bank can't figure it out, like, send it to me, I'll close it.
I got this.
Right?
Yeah.
And dude, we closed 99 out of 100 loans.
That's amazing.
Right? The only loan we never closed was, we didn't close it because the guy put 2 forms of employment income in California. He said he worked at his old company and his new company at the same time. And I asked him, he sent me paycheck stubs for both. He's like, yeah, I have employment with both. I was like, cool. That employment ended. Like, you don't have enough money to buy it.
We can't help you if you lie, man. We need the correct, real information.
Right. Don't try, like, don't ever try to, like, make it sound, always make it sound worse, actually.
Yes.
Like, and I don't know about you, but, like, I do business like that too. When I'm talking to clients, like, when I closed yesterday, I'm like, hey, you're gonna have a $375 lock extension fee if we don't get this done. She got it done. I'm like, you're still probably gonna have the fee. We got it closed today, no fee. She's like, there's no fee. I'm like, I know. But if I don't explain to you that there might be and there is, you hate me. If I tell you that there might be or probably will be and there's not, we're still friends.
It's the mentality I have too. I always give worst case scenario, like, because like you said, it's always better to, like, give the worst case just in case it happens, because there's a million things that can go down, but anything but that happens, they love you. So prepare for the worst, man.
It's easier that way, that's for sure. You asked me a question. I don't know if I answered that one all the way, though.
Yeah, no. So it was the cannabis, like a deal that people would find surprised that you were able to get approved.
Yeah, federally, not federal registered income, and we were able to get that done. That's a pretty cool one.
What do you think the biggest mistake buyers make right now?
Trying to buy a house, it's, like we already talked. I truly believe this, that I think based off of current market conditions, the incentives that they're getting from new builds, right? The lower interest rate, which is part of it, but they're also getting, like, they're paying the realtors 5% to go sell that new build house as well.
Right.
So I think there's a lot of incentive in the marketplace pushing consumers in that direction, as opposed to helping them see, like, what actually makes sense for them. And somebody talking to them about, like, the fact that you are going to lose months in the car, or that you're not going to be around your kids that long,
Right. No, you got to look at all the factors, right?
I didn't buy my house because I didn't want to be around my family. I bought my house because I wanted to start a family, right?
Yeah.
My first one was not, I want to invest. I want to, it became that, but that was all through learned experience, and it didn't start off that way.
Yeah, you learn by doing, man. That's just how it works. So trial and error.
I think that's a big part of it.
That's awesome.
Lots of people are talking about. What about you?
For what? Like, most difficult deal that I got through?
Yeah, let's. Is that cool if I ask you the same questions?
Absolutely, yeah. I'm totally down for that. I'm just trying to, mine are all difficult to go through, man. So, but I'm trying to think of one that would maybe be surprising. I think just as simple as the DSCR ones, right? Like, I had a client who didn't really have, much income on paper, self-employed, wrote off a lot of his income. So in fact, I think one of his tax returns was straight negative. But found a property where it made sense. The mortgage payment was lower than what the rent was going to be received. And so it was that simple. It's just those ones, we don't need to look at tax returns. We don't have to go through all that stuff. And so that DSCR of just being able to approve the loan based on the property itself and not the individuals or their business income. Yeah. I think that is, it's still something that's not talked about enough. Like, and I know it's almost daily practice for us now. Like, it's, DSCR is just such an easy, great product, but there's still so many people that just have no idea it exists.
Well, and the rates on them are really competitive too.
Absolutely.
Like, they're not bad.
No, the one I did the other day was like in the 6s. That's what regular mortgage rates are. Yeah. Like, same thing. And you can do as little as 15% down, 20, 25, depending on what you can do. But
it has to cash flow. That's the thing.
It does have to cash flow. Back to your point,
it has to cash flow positive, and it can't just be like, I think it's going to cash flow positive. No, it has to happen on the appraisal.
Prove it,
right?
Yes.
And it's so cool. Like, when people do those, if they get set up correctly with somebody who knows what they're doing, easy process, not difficult, right? It's when you go to somebody like, I want this loan, you call somebody that doesn't know what they're doing, right? And they try to do it, and then it's like, and
then it goes bad.
Yeah. That doesn't work out so great.
And then fix and flips are really cool too. Like, like you mentioned, you find a property that, the two biggest reasons I see why people don't buy is either, number one, they don't have the capital, right? They don't have the down payment. They don't have tons of money saved up. Or it's that monthly payment, that monthly payment shock. So those are the two questions I always start with all of my buyers. I'm like, what are we working with? And there's no wrong answers. That's what I tell everyone. I'm like, I don't care if you tell me you have $1,000 to work with. I may have to get a little realistic with you. You tell me you've got $500 to work with and you want $800 a month. We're going to have a conversation on what that looks like in a purchase price. But once I have the answers to those two questions, I can find the product and the price for you. Like it's working backwards from there. So
I always tell people we're not selling houses. We're helping you find the money for the house.
Right.
To make sure that it works out the way you want it to work out.
And because there's a million programs. Like I'm still a big DPA guy. I love DPA.
I was going to try and bring that up too.
Yeah.
I'm so glad you did.
Yeah.
Because there's that new one, 100% that you can pay off in 6 months.
Yeah.
Right. So most people don't know that sometimes down payment assistance has a slightly higher interest rate. I say sometimes.
Most
like
of
99% of
most
the
of the
time.
time.
Okay. You get on ChatGPT, it's going to tell you can go get a grant for some property, but there's only like 3 in Arizona that it works for. It's called HUD housing. Feel free to look it up.
Right. Yeah. Good luck with those.
HUD.gov. That's your website. Good luck. Have fun.
Yep. Yeah.
Not worried about plugging them at all.
Nope. Yeah. Inventory is nothing.
Yep. But it's like you go through this process and you get these people who do down payment assistance, and it used to be like 3-4 years. You have to be stuck in this house.
Yeah. Sometimes 5
and
years.
if you refinance it, they're like, oh, you got to pay that money back that you just borrowed.
Yes.
It's like, wait. How did I
Most of
borrow
the state
that?
programs were like that.
Right.
It was a 5-year repayment term. That same thing. If you couldn't refinance or anything for 5 years, or you had to pay it back.
Yeah, so we're going to bump your interest rate, and you can't refinance for 5 years. So you're going to
stuck.
take that.
Yeah,
Yeah,
absolutely.
it's just for you.
Right.
You just want to make sure you had assistance in that house.
Oh yeah. No, I did tons of
Yeah,
those.
this
at
new
Loan
one,
Depot.
man, 6 months.
Yeah.
There's 6 payments, 180 days, right?
Yeah.
And then it doesn't even matter if you don't even have to keep your job.
Have you heard about the Hoper one?
Yep.
The Hoper one too. That's another killer one.
That
man.
one's with solar and all
you
that,
can add
which is
solar
great. But
to
like
it.
that one, I feel like changed because the solar laws all just changed.
No, the Hoper's still a strong
They're
one.
still doing it.
And the cool thing is Hoper now has a refinance program as well. You can give down payment assistance on a refinance.
That's pretty cool.
So but it only works if your house doesn't currently have solar on
Right.
it. So it doesn't work for the existing ones with solar, but if you don't have solar and you want to put it on there, dude, you can finance that sucker in there. Don't go through a third-party solar. Those people are rip-off artists, man. Like
I agree. No, so there's a lot that goes into that, and that's a cool thing. Like I like the Hope for Hoper plan.
Yeah,
that was a very, very cool one. But that same house hacking that we talked about, buying a primary, right, and then going to the next one, you could literally do it with down payment assistance.
Yes.
You can go through. You can buy that house that's a little bit smaller, something that's affordable.
Right.
Take that higher interest rate for those first 6 payments. Refinance right out of it, right? Take yourself into an FHA streamline, get that thing into a better spot, or convert it over to conventional.
Right.
Take all that money you're going to take for your down payment, put it into the house.
Yep.
Right.
Yep. Fix it up.
Fix the blue carpet and red walls.
Yep.
Right.
Yep.
Go paint it. Put in a new kitchen. Give it a new bathroom. Build some sweat equity into that home. So when you do the refinance, if you do have 20%, maybe get rid of the mortgage insurance. Right. Put yourself in a better spot that way. Stay in that house for a couple more years. Get yourself into another spot, and then hey, you don't even have to make a down payment on the next house.
Right.
Because you're not required to be a first-time home buyer for down payment assistance.
Correct. So many people don't know that either.
You're not required to. You can own a home and still get down payment assistance with these new programs that are out there. It's
That's your
crazy.
first-time homebuyer programs. Like, do you mean down payment assistance? Because they're not the same.
No, they're not. No. And again, that's why it's so important. Like, talk to people, have those conversations with professionals. Like, and more importantly, it's like, don't just talk to somebody. Like, don't just call me or you. Call somebody you trust that knows their stuff. If they don't know their guidelines, like, I haven't had a computer in front of me once, neither of you.
Right.
Neither one of us prepared for this today.
No, not at all.
Right? Like, I forgot we actually had this until about 10 a.m. And I was like, oh, it's on my calendar.
Love it. That's why calendars exist.
Yeah, it's exactly why calendars existed, man.
People like
got to
me and you,
manage my life.
I live and die by that thing.
Yeah. But dude, like a lot of people in this industry, if they're brand new, they may not know the things
Correct.
and it's not that they're not in a good place. And definitely talk to those people if they're your best friend.
Absolutely.
But
Right.
if you're not getting that same level, it's like you got to go to somebody who's really on it.
And the other new thing that we're up against now is AI, right? How many people are going to ChatGPT or going to Gemini before they talk to anybody?
Oh God, you're gonna let me make my plug, bro?
Absolutely.
Oh, he's gonna let me plug it. Oh, that's
Plug it.
That's so nice of you, dude. It
Absolutely.
happens all the time. And I actually lost multiple clients because they go to Chat, or they go to Gemini or Perplexity or Claude or whatever else, and they say, "How do I buy a house?" And I want to challenge every single person that listens to this, that watches this, to go on and ask Google or Chat or whatever, right? Not Google, but Gemini.
Any AI chatbot.
I want you to just go in and say, how do I buy a house in this area if you're thinking about it, right? And watch the freaking novel you get to spit out of, right? And then I always tell, like, I have my own AI that I built out,
Yeah,
this.
I do.
And it's brand new, right? I want people to break it, so please go online, try to break it, like use it, have fun with it. It's called mortgageshrub.com. It is a Bush. It teaches you about home loan finance. And I want you to ask the Mortgage Shrub the exact same question that you asked ChatGPT or Perplexity or Claude, and compare them side by side and just decide which one's easier. Because in reality, when ChatGPT tells you about all the grant programs that are available in your area, it tells you about every single realtor you can use. It tells you about all these lenders you need to go shop for. It gives you these 19 to 23 steps because you're asking a pretty general question, right?
Absolutely.
Like, you can get lost in the sauce, man.
Easily.
And I've had clients come to me and say, I need a $50,000 grant. Talk to ChatGPT, that's what it is.
That's what I need. Yep.
And this guy actually was one of those guys who was like, I'll work for you for free.
Yeah.
Right? Super nice guy. And I was like, all right, dude, you're not going to get a $50,000 grant because you have a VA loan. First off, right? Nobody's touching that. Like, that rate's great. You don't, just go with VA. If you're a veteran, you've got one of the best benefits in the world.
Best in the world.
And the best rates, right?
Yes.
Which is not like what the banks used to tell us.
Actually the best rate.
You actually have the best interest rate. You should never be higher than the other rates.
No.
Maybe, I don't know, if things change in 10 years, this is outdated, but right now you got the best rates.
Yep.
And then he came back and he was like, okay, cool. I told him the truth, showed him the HUD homes, showed him where those grants were located, because it's true, they exist.
They do, absolutely.
And dude, he ended up just not buying a house for like 2 years. And then he finally did buy a house.
Yeah.
Bought it with someone else.
Oh man.
And I was like, all right, dude, what happened? And he was like, well, you kind of upset my wife. I'm like, how?
Yeah, what'd I do?
What did I do to you? How did I hurt? He's like, tell me what I did. Who
hurt you, right?
Yeah. I'm like, how can I be different? And he goes, Matt, he's like, you told us about the grant thing. And like, I'm like, no, you asked ChatGPT about the grants. I just told you how they work and that they're not a good idea. And he's like, yeah, my wife didn't like that.
Yeah, you can't disagree with the AI, man. AI is always right.
Right. So
Not your 14 years of mortgage experience.
Mortgage Rub is basically like all of our industry knowledge that kind of goes in there. It helps consumers. You can have one too. I can give you your own Shrub.
Absolutely.
But it helps loan officers give clients a resource that they go talk to that gives correct information based off of guidelines, reality, their situation. It'll save their information for them, but it will never hold your information and share it with anybody else. It's not a sales.
That's awesome. Yeah.
It's not for sales. It's for you to educate yourself on what's available.
Love that.
Right. And not have to like. The other thing is, I've always had this habit where clients feel bad about calling me. Do you have that happen too?
Yeah, they think we're too busy.
And I'm like, please.
I get that all the time. I'm like, I'm never too busy for you. I swear.
So I'm like, hey, if you really truly don't want to call me because it's outside of business hours, only time it's okay for you not to call me is outside of business hours.
Sure. Yeah.
Here's a resource. Go to mortgageshrub.com, ask it your question, see what it says.
Yeah.
And then come back to me and tell me what it is. And the cool thing is like, as a loan officer, and you'll get it too, if the client wants to book an appointment with you, they can choose whether or not that chat is shared with you. So you know what they talked about.
Oh, that's cool.
How they had that conversation, what happened, right?
Man.
And what information it gave them. So that way you can say, okay, cool, you're looking at doing this. You want to qualify this way. This is your house, right? It's got all your calculators, shows you amortization.
That's legit.
Different loan programs.
We'll drop the links and, and all this. But dude, thank you for sharing that. Because I know you were working on that. So you showed it to me.
Yeah, it's pretty cool. It's pretty badass, yes, AI is, it's really awesome if you have it set up to work the way you want it to work. And that's what it is. It's like, I already took the time to set it up. You're gonna take the time to set yours up, right? So you'll have the same thing.
Because one of the biggest things, I think most people know this, at least I hope so, but like with AI, the information's in there, but your prompt and the way you ask the question and how you ask your question is so important to get the right answer. Yeah. Because like you said, it'll just spit out everything.
A dictionary about
everything, right? Because in this world that we live in mortgages, like I think I have 400 plus lenders that I have availability to that all have different programs and guidelines and benefits and incentives and whatever it might be, and that's just where I work, and you're the same thing, and so and then you take the client, and depending on their scenario, there's just a multitude of potential options. And so it's just that again, that's why we're here. It's that we're that funnel of taking all that freaking information and trying to find the right fit for the client. But AI doesn't know how to do that.
Well, I mean, maybe one day it will.
Maybe,
but even then, it's like, I truly believe that people are going to want to work with people when it comes down to this kind of stuff. Like
with this type of stuff.
Right. Having all the information, being able to go through all the things, having AI be able to track everything, right? Yeah. Which personally, I like the fact that we're licensed because I'm personally responsible to take care of your mortgage. Absolutely, right? My license is on the line if I don't do the things that I say I'm going to do.
Right.
If a model, a language model, if an assistant, if a system points me in a direction that's not quite right because it didn't take the time to truly understand where I was coming from, or maybe I gave it answers that I thought I should be giving it because I wanted to do those and it couldn't hear the change in the tone of my voice and like question those things and challenge it with me, and it couldn't bring me to the same conclusion that I should have had with a mortgage professional that knew what they were doing. Like I could be missing out on things. Now, I don't think that AI is bad, right? No, I think it's going to help us all in our jobs.
But it's not accountable when it gives those bad information.
Right. And when we have the encyclopedia options, which is what a lot of us have right now, those are the chats and the Claudes.
Yep.
Those options they're going to give you the encyclopedia of mortgage knowledge because that's what you're asking it for. Right. The stuff that you and I are kind of going through, the stuff that we're developing to make it just more convenient for the consumer, it's built to help you educate yourself.
Yes.
Right? That's all it's there for.
Decision.
It's not there to like push you in one direction or another.
Right.
It's like, how do you...
We're advisors, I feel
like what is DTI? Like, I don't want a client to feel embarrassed.
Yeah.
Go pull it up, dude. Here's a spot that has all these lingos and terms.
No such thing as a dumb question. And I think a lot of it is because no matter what we may, we've know how to kind of take the emotion out of it, but regardless of who you are, buying a home is an emotional situation. Like it's very emotional. You're spending hundreds of thousands of dollars and emotion always gets involved. And so again, we try to help break it down to the numbers, but that's why it's good. It's important to have the right real estate agent, right loan officer, help put that together. Much of our job is playing therapist, talking people off that cliff.
Even when inspections come up and they're like, "Oh my gosh, the roof trusses are broken. I'm not going to buy the house. It's going to collapse." Like, no, dude, get a structural engineer. Like, go check it out. I mean, there's so many things that come up that people just aren't ready for, and it's like, well, what do I do? The toilet flushes backwards. It's okay.
It's gonna work out.
It's gonna be all right. But you could go down these rabbit holes if you don't have somebody that's there walking you through it, telling you it's gonna be okay. And that's why it's so important to have people you trust throughout this process.
And that's why people that are always gonna outwin the, like I said, the AI definitely plays for it. I use it every single day. But it needs to help educate more, help make the process easier, help or the communication piece of it, right? Because we are, I'm a family man. I know you got kids as well. Like, as much as I'd love to just spend all waking hours helping clients, like I got to feed my kids. I got to get them to school. There's going to be moments when I can't answer the phone, but I also understand that people need answers when they need them. So that's where AI is going to bridge that gap of being able to get them the correct information when they need it.
And that's, you're hitting the nail right on the head with that. It's coming, like we're all adapting it, or we're adopting it. If you're not adopting in the industry, like you're making a mistake. You got to figure it out.
You're not going to make it. So,
but it's a tool like any other tool, just like loans. The right loan for the right person makes sense. That same loan described to somebody else sounds like you're robbing them.
Absolutely.
Because they're like, what? You had to pay a higher interest rate for that down payment? Yes.
It's not a one size fits all.
Right, exactly.
And you can't compare your situation to anybody else's.
It's crazy. You're talking about like what people are making mistakes of. That's comparing yourself to somebody else. Don't do it, right? Like,
they're not you.
And not only that, the only person getting in your way is you when you're comparing yourself to somebody else. Like at that point, you're just putting yourself at odds with somebody when it's like, why, right?
Yeah.
We work for rival companies.
Right.
We're not hurting anybody by being here.
No.
Right? All we're doing is we're learning, we're growing, we're helping other people.
Absolutely.
And like, that's what it's all about.
I agree.
You can't ever sit there and be like, well, I wish I should be there, or it should be 2019, or it should be 2011. Or things are the same that it was. No, dude. Right. You are in the exact spot that you're supposed to be right now. Make the best of it. Do what you can do with it, right? Words matter. It's not, I can't get there. It's how do I get there?
Love that, dude.
Yeah.
All right. Lightning round. Favorite Arizona restaurant?
Hold on.
I think you're misunderstanding the purpose of lightning
round.
I
know. I understand. I'm not going to give you the wrong answer. Rustler's Roost. There it is.
Rustler's Roost.
Rustler's Roost.
Gotcha. Okay.
It's on top of South Mountain, or right by South Mountain.
Okay. I don't think I've ever been there.
Yeah, dude, it's on top of the mountain. There's a cow out front.
No shit. Okay.
Owners are pretty cool people. They have a slide, live music, great ribeye.
Love it.
Amazing prime rib.
Sold.
Yeah, Rustler's Roost.
Dream vacation.
Right now, Japan is coming close to the top of the list. We just got done with Costa Rica. Costa Rica was the best vacation. Yeah. By the way, shout out to AI. We used AI to plan our vacation. We drove from one side of Costa Rica to the other side of Costa Rica, so we spent times on both sides of it. And it was like, I should have paid a booking agent, but my wife did it all with AI. Then we put what we wanted to do in there, and then we did our own research too. Yeah, it took her like a month to plan this thing, but that was
That's
a cool
legit.
one.
No, Costa Rica.
Yeah, Costa Rica was it was awesome.
Favorite source of caffeine?
Ooh, coffee.
Coffee.
Just black coffee.
Straight black coffee, my man. Biggest pet peeve?
Dishonesty.
Dishonesty.
Yeah. Somebody who's being disingenuous or dishonesty, right? Feel free to like manipulate me a little bit and like ask me what I'm doing that day and be like, what are you doing today? Nothing. Okay, can you take me here? Yes. Okay, cool, because I'm doing nothing. Like, that's not going to bother me because like you're my friend. But when it comes to like telling me that you want to do something and then doing the exact opposite, like what are we doing?
Yeah, no, that's...
Yeah. Don't be disingenuous with me. Tell me the truth. And if the truth changes, it's fine. Just tell me the truth.
Best purchase for under $100?
Cell phone.
Cell phone. You can get a cell phone for under $100?
I mean, yeah, you just get the free one.
Okay, love it.
Right? Or you buy the $100. I mean, used to be. I don't know, dude. I don't buy phones like that anymore. I just pay. I guess that's not really fair.
Yeah, you just wait for the free one, right? I'm on that like free iPhone for life plan or whatever.
I'm pretty sure you just pay with it with your plan.
Of course, yeah. They're getting there.
But yeah, dude, a month of self-service. I would say self-service like for a month, because that thing in your hand can make you more money than anything else.
Agree 1,000%. All right, I know you're dyslexic, but I'm going to ask it anyway. Favorite book?
Oh, I'd have to say Harry Potter.
Harry Potter, all right.
Yeah,
Which one? All of them?
Dude, it's the only actual books like I ever sat down and truly read.
That's fantastic.
Right?
That's awesome.
I had to because they're coming out like we're the same age, so
absolutely, dude. Yeah, I've read them all too. Massive nerd. They're my favorite. So you were very upset by the movies then because they missed a lot.
Oh, they did. They really did.
It's so much. Remember that first one? I was like, what about the elves, man? Like, where's the whole kitchen stuff? Anyway, don't get me started. All right. Is there anything what are you currently obsessed with right now, if anything?
Really just building out these new systems that I've got, right? Doing the mortgage trust thing.
The mortgage trust.
I literally spend time on it every day.
Love it.
It has been my new, I mean, I've been working on it since 2021.
Oh shit, you've been working on it a while, dude.
Oh yeah, dude. We were doing it before like AI was even like a real thing.
Yeah.
We wanted this thing built out to help people understand things, and like it started off as a chatbot with like different answers, gave different responses, and then it's really grown and developed into like what it is right now, which is actually helpful.
Even the past year, just the advances we've seen in all of it is like it makes me really excited for what the next 5 years has. Like it's gonna be really exciting stuff. So, and then finally, what is your favorite thing about being a dad?
It's also the saddest thing, but it's watching my kids grow up.
Yeah, I feel that.
Like it sucks seeing them get older,
Awesome, and it sucks.
It is, but it's like, and I'm gonna get teary eyed on this one too, because it's like every time like I realize that they got older, or like their personalities changed, or something else came up with them, where they're making this new experience, or they're doing this new thing, and like even now, because like they're 12 and 11, so I'm starting to watch them kind of go away from me and get closer to like learning how to do things on their own and making their own choices and being truly like their own little men. It's like I've done my part for the most part. Like I still have some influence, but for the most part, it's like they're doing pretty good. So yeah, that's
awesome.
Yeah, hardest part, but definitely the best part too.
That's cool. And obviously, mine are just a touch older, like 15 and 11. But it's the older they get, the more fun it is. But it is like you get those little Facebook memories that pop up, and I'm like, look when you were like 5. Like it's so hard. But
we should change the name of the podcast. 2 grown men getting teary eyed.
Dude, for real, man. Being a dad is so much fun because like, and one piece of advice or something that my mom told me early on that's really helped me as a dad is, she told me, you came as you are. You are who you are. And so I try to just think about that with both my kids, is they came as they are. I'm just here to, like I said, kids learn much more from watching you than anything you'll ever tell them. And so anyway, that's just something that helped me. But
100%, man. And that's really what it's all about. It's like you get to be a part of other people's lives. And I tell people that too. Like when they're coming to us to do loans, it's not just about like, I'm going to do your loan. You're a doctor, you're a paramedic, you're a firefighter, you're a police officer, you're a lawyer. You have your own life to worry about. You got your own kids to worry about, your own stuff, right?
Yeah.
You need to work with somebody that can worry about these things for you, so you don't have to worry, and you know it's going to get done. Yeah. You do your part. You do what you're being asked to do. Make sure you get your documents in on time or in advance. Get your in advance, right?
Yes.
Not once you find I'm going to do it late. Do it now when you have it. When you're thinking, just make everybody comfortable
before you're under contract.
Yeah, and we'll close in 3 days. Like it's
absolutely.
Easy. Minimum closing time is 4 days.
Yeah, that's the bare minimum.
Bare minimum you're allowed to do is 4 days. That's a law. That's not because we're not able to go faster. It's the law that you have to have at least 4 days.
Yep. TRID.
What's your fastest?
4 days.
4.
Yeah, I had a 4 day through UWM, of course.
Mine was 7.
Okay. Yeah, 7 days to clear to close. That's
No, 7 days, like physical funding, everything done.
Oh, dang,
7 days.
that's legit.
Because they said 4 days is the true number,
Mm-hmm.
but it was because they said that you had to go 7. And I find the law afterwards. I was like, no, it's 4.
It's 4. Yeah. Yeah, it's got to be the right file. It's not everybody can do that. So.
No, but you know what? They're going to come. And like when you get 15 to 30 days to close anyway, like it just makes it.
And I will, say
30, because 30 makes it easy.
With the advances in technology, that's what's going to help all of it, right? Like there's going to be systems in place to, like, once they have their docs in, it's going to
The virtual closings, have you done those yet?
Yes, I have.
We just did one. Yeah, that was so cool.
We have a no-touch closing.
Oh,
right now.
yeah.
That's
It's
amazing.
like, and the client doesn't even have to do anything until their end.
Right.
They don't. Like I sit on the phone with them. I love it. I love virtual. Dude, I can go through all your closing documents with you myself.
Yep.
You don't have to sit there with a notary. He
Don't have to
doesn't
go
know
to
what they're
notary.
talking about.
Yep.
He's trying to explain to you loan docs that they've never seen before. That they're like, well, it's like this. No, dude, you don't know.
Yeah.
Let me help you close. Ask me the questions. Here's what you're signing. Here's what's happening. I used to do it with clients before anyway.
Mm-hmm.
Now it's just a whole bunch of save time for somebody else because they don't have to do what I already did.
Right.
Clients just breeze right through it. Right. They get with a notary. Notary's like, hey, is this you? Yep, perfect, done. Perfect.
That's it.
Right. Love the virtual closing.
Yeah, there's some cool stuff coming down the pipe, man. So,
Dude, this has been a lot of fun.
this has been awesome, man. Matt, it's been great having you on here,
way
brother.
easier.
Told you, right?
It's like, well, realtors are, like, and you are one. Right?
I'm a realtor now. Yeah. So.
Congrats on that, by the way. That's
Thank
cool.
you. Yeah, I'm enjoying it. I'm trying to just, it's mostly just because I've scaled the mortgage side out pretty decently, and so it's just it doesn't require a lot of doesn't require me being a huge part of it to run.
Yeah.
So real estate is just something I've wanted to do for a while. Yeah. Well, Matt, pleasure having you on Happy Hour with HatchMan. We got to do this again sometime, dude.
Yeah, you want cheers?
Cheers.
Finish it off.